everyone. My name is Michael McCreary, as Jalen mentioned, regional brokerage consultant here based in Atlanta, covering the Southeast. I work closely with a lot of the finance consultants in the branches. They'll bring me in to meet with our self-directed clients to talk about a variety of things. And certainly, ETFs has become extremely popular. I know we had a session this morning on thematic ETFs, and that theme is kind of continuing on. So we got Anna Nearest with us as well, and we got the chance to do this virtually last fall, right? So good to have you in Atlanta in person for this session. So do you mind telling everyone a little bit about yourself?
Absolutely can, Mike. Hi, everyone. My name is Anna Nearest. I am an iShares product strategist, which is basically a fancy way of saying all I do every day is talk about ETFs, exchange-traded funds. We're going to get into those in a little bit. But I think, and I have to be careful here because there's a lot of people who work at BlackRock in this room, but I think I have the coolest job because my job is to think about change that we see, that we feel happening all around us, and to think about how to build baskets of stocks that can help people capture the potential opportunity growth of those baskets, of those themes. So that's a little bit about me, but I want to say a real big thank you for having me here. I am so excited to be in front of all of you today and talk a little bit about what's driving markets.
Well, what is driving markets? 2025, right? It's been an interesting start to the year. I think we can say that. So what are the themes that y'all are looking at BlackRock and iShares?
Yeah, that's a great place to start because 2025 has felt like a year of expect the unexpected. And when you look at headlines and you look at what moves the market is making, what is so interesting to me is that rather than in the past where we would see markets really driven by kind of traditional fundamental drivers, things like company earnings results or economic reports, increasingly, especially in the past 2 years, we've seen themes really driven by markets. So think back to January, February of this year. We saw a sharp market pullback because of an announcement related to a Chinese AI startup called DeepSeek. But that was just a function of AI as a theme, really, and the market trying to figure out what is the value of AI and what is the value of AI to the stock market. Then you move forward through time a little bit further, you get to April, Liberation Day, right? And that was really about the theme of tariffs and trade uncertainty. And then even, thinking back to earlier this past 2 years, if you think about January 2024, where we reached this kind of big moment for crypto too, where it entered the main stage and was able to be put into an exchange-traded product wrapper, which opened up investing in crypto to a lot of investors who maybe previously couldn't access that space. So it's really, really interesting, but I think the big takeaway from a year like 2025 is more than ever, there are these themes that are driving markets. And so now, for investors, it's not just thinking about sectors or countries, it's thinking about what themes are driving markets to be able to understand what's going on and to try to find where the potential opportunity is.
Lots of opportunity and themes. So, but it sounds like when you're talking about themes, like there's different types of themes, so they're not all created equally, right? Can you kind of expand on what some of those differences might lie within the themes?
100%. So a theme is just a powerful force that's impacting everything from how businesses make decisions to how governments operate to the things that you and I do when we're going to the grocery store or buying things online. And to help make sense of themes, I think first it's important to distinguish between what is a cyclical theme and what is a structural theme. So cyclical themes, as evidenced by this squiggly line here, they tend to be short-term by nature. They're lasting days, maybe weeks, months at best, and they're typically driven forward by a single catalyst. So an example of a cyclical theme would be a rise in a select group of healthcare stocks due to a piece of newly passed medical legislation, right? The tricky thing is because they're so transient, it makes timing them incredibly important, but it also makes it incredibly difficult. So when we talk about investing in themes at BlackRock, we try to focus on structural themes. Structural themes by nature take a long time to play out. We're talking about years, not days. And what's helpful and interesting to note about structural themes is that they are not driven forward by a single catalyst. They're driven forward by multiple catalysts simultaneously. So think long-term government regulation, think societal shifts and preferences, think technological and economic advancements. And so what makes structural themes a little bit easier from an investing standpoint is that it's not necessarily about trying to time them. It's more about kind of keeping your eyes open, watching the change kind of unfold around us, and then ideally investing in it broadly versus narrowly. And that brings us to my favorite part. So I'm a bit of an ETF nerd. ETF, that is exchange traded fund. As I mentioned, like thinking about these types of funds is my job, and I love it. They're my favorite vehicle, more than a Ferrari, more than a Lamborghini, investment vehicle. That is a terrible joke, thank you for laughing. But I think of ETFs as kind of like a happy middle ground between two forms of investing that people often look at. On the left-hand side, you have a stock, right? Trades during market hours. So does an ETF, trades on an exchange. That's the ET in exchange traded funds. On the other hand, you have a mutual fund that's very diversified. It's giving you exposure to a collection of assets. Maybe they're stocks, maybe they're bonds. That's what ETFs do. So what's so helpful about ETFs when it comes to thematic investing is that picking the winner is hard, especially in very fast evolving themes like artificial intelligence, where no one knows who the ultimate winner of this change that we're living through is going to be. So instead, what you might want to do is think about, okay, well, what ETF provides me access to all the players in this theme? Thinking about the stack of AI technology, starting with the infrastructure layer and data centers, through the middle of the stack with things like models, data, and intelligence, and then the top of the stack, the software, the applications that people are buying and downloading on their phones, and taking a diverse approach to owning those types of companies, as opposed to maybe trying to pick one winner, when there's thousands out there all competing. Actually, Mike, can I ask you? You work with clients all day. You talk to investors. What do you hear from investors about why they like ETFs?
For me, I think most clients gravitate towards ETFs because it gives them the diversification of a mutual fund, but it also gives them the liquidity of a stock, right? So you can easily get in, you can get out of them. They tend to have low fees, low cost associated with them. And I think one thing that gets overlooked in terms of the benefit of an ETF is just the risk management capability. You can place a stop order to protect your downside on an ETF. You can't do that with a mutual fund. You can use options and some capabilities to protect and hedge. You can't do that with a mutual fund. So I think you just tend to have more flexibility in general with an ETF.
And that's why there's over $10 trillion in ETFs around the US, which is pretty incredible.
So you kind of started off with some of the themes that you are talking about, but I mean, there's got to be some other themes that your team is looking at beyond just kind of like the broader themes that are driving 2025. Like what other developments are you looking at there?
Well, so I think about the biggest structural themes as a group of 5. The first is digitalization, and that includes things like AI. The second is thinking about the transition to a low-carbon economy and just the way in which energy supply is being rewired, in part due to increasing demand for energy from things like AI. The third is about geopolitical fragmentation, which is really a trend that we're seeing as a result of kind of living in a post-COVID world. A lot of supply chain rewiring that's happening as a result of that event. The fourth is thinking about the future of finance, which is how do we invest? What are we buying that's different than how we maybe invested 10 years ago? And then the last one, and I think this one is kind of an interesting one, because in some ways it is the most guaranteed of all structural forces because it's based on population shifts. So we forget oftentimes that there's this divergence that's happening in different parts of the world. So if you're in the developed parts of the world like US, Canada, we have a problem I like to call more grandparents than grandchildren. which is to say that there are more adults in the US over the age of 65 than there are children under the age of 15. And that has implications for an economy, but that's just one part of this population shift and divergence that we're seeing. In emerging parts of the world, like India, for example, they have the opposite problem. Over 65% of India's population is under the age of 45. That's a very youthful population, which has impacts on everything from their tax base that the governments can rely on for upgrades to infrastructure to manufacturing and jobs. So those are kind of the 5 big mega forces that we look at. But right now, Mike, I have to tell you, there are 3 that are in particular focus for us. So one is AI, the absolute takeoff that we've seen.
And that's artificial intelligence.
That's correct. Artificial intelligence, technology that has the ability to mimic human behavior, analytics, and actions, and most recently as a result of things like ChatGPT entering our collective consciousness. Actually, just for a quick show of hands, how many of you have used a generative AI tool like ChatGPT look around, keep your hands up. Like, that is incredible for a technology that only entered onto the scene in 2022. Incredible, the adoption that we've seen with this technology. And so, it's funny to me because when you think about a theme like AI, it's been bubbling long in the background since the 1950s. But a couple of things have converged that made this breakthrough possible today. And I often think about it as like AI today is like a car, right? So the first part of a car is you need an engine. And for a lot of AI, the engine is semiconductors or chips. In particular, this one type of semiconductor called the graphics processing unit, or GPU, is of particular importance because you need a lot of those GPUs to train these large language models. The other part of a car is certainly thinking about the data, right? Data is like the gasoline for a car. Data is what fuels these large language models. It's estimated that ChatGPT was trained on almost all the publicly available text on the internet, right? They needed a lot of GPUs to be able to do that, and they need a lot of data. We're actually getting to a point, Mike, believe it or not, where we may run out of data to train large language models, and so we'll need to develop AI that develops synthetic data to then train the models on it.
How do you even fathom that?
Data is so important now in an age of AI. But I think what is the key unlock is thinking about, maybe not these days, but very important to a car is a driver, right? So prior to 2022, if you wanted to interact with the latest and greatest AI technology, you had to be a coder, you had to be a computer scientist. And what ChatGPT did was it enabled everyday users to access some of the greatest AI intelligence technology. And it's still early on in this phase, and we'll talk a little bit more about that, but that's an area that we're very excited about.
Yeah, it's so impressive. It's like we're just getting used to adjusting to AI in our daily lives, and figuring out how to use it. But it's going well beyond that, in terms of the depths that AI can do and provide for us down the road. So I actually bought a car using AI, if you believe it or not.
No kidding.
Yeah. So they send me an invoice, said, hey, this is the price they're willing to pay. I took a screenshot of it, and I sent it into ChatGPT, and they said, you can get a more aggressive price. Would you like for me to craft a letter that you can send to the dealership? I said, yes, please. But sure enough, they came down, and then they matched that price, and I was like, I didn't have to leave my sofa. It was great. So those are the ways that we can kind of use it more in like everyday life. But is there more in terms of AI that we can kind of get into there?
Well, one thing that I think is so interesting is, a lot of the themes we're going to talk about today are digital, right? They're based in the digital economy, AI, how we use data, how we process it, using these tools to generate everything from, investment analytics to poetry and everything in between. But there is a physical component of this new digital world that's very important. And that's where something like infrastructure comes in. It may not sound as sexy as AI, but it is critical because so much of the constraints for AI progressing are physical. We don't have as many chips as we want. We don't have as much energy. We live in a resource-constrained world. And so infrastructure, to me, is such a fascinating space because we touch infrastructure in every aspect of our lives. When you get up, when you brush your teeth, you turn on the tap. When you flip on the light switch, when you drive on a road or pass by a toll booth, like those are all examples of infrastructure. And so what we've seen as a result of this geopolitical fragmentation megaforce, say that 3 times fast, that's a mouthful, is a lot of spending, both by public spending, government spending, federal, local, as well as private spending. And so infrastructure investing, as an example, is a way to kind of get exposure to those companies that are really rebuilding American infrastructure. Actually, I have a fun fact for you. Mike, can I put you on the spot a little bit?
Yes.
I know, kind of a tricky question. You're stuck. Can you guess how many bridges there are in the United States? I'll give you a hint. It's in the hundreds of thousands. I know.
635,000.
Okay, that's incredible. It is 600,000. I don't know. We did not plan that. That's incredible. All right. Another tricky one.
I chat GPT that.
Isn't AI amazing? How many of those bridges would you say are structurally deficient?
I would say roughly 75%.
Okay, thankfully that's high.
Okay.
It's technically 1 in 13, but still, any structural deficiency is a little bit worrisome. The average age of a bridge in the United States is about 45 years old. So these are upgrades that are absolutely critical that we need to be thinking about. And then last but not least is Bitcoin.
Yeah.
So it's so interesting that crypto has gone from being this kind of niche fringe technology that nobody really understood to now kind of being in the main stage, and now investors are talking about it, policymakers are talking about it, and it's a really new world for crypto. But I know I won't spoil it. I know we're going to go into that later.
No, yeah. So we've highlighted the 3 main ones that are folk keying in on right now. Do you want to dive a little bit deeper into the AI one, or is that kind of? Because there's a good bit more to unpack, I'm sure.
Oh, there is plenty to unpack, for sure.
We need a whole session just on like AI.
Easily. You could have three whole days of sessions just focused on AI. But I want to keep it high level, and I want to just propose kind of a framework for how to think about AI's evolution, because this is truly a multi-decade theme, and we are really in the first innings. So the way I think about the evolution of AI is split into 3 phases. The first phase is the one that we're in now, which is the build-out phase, right? And that's characterized by a ton of spending into the infrastructure layer of the AI stack, which is things like accelerated computing, data centers, redoing our energy grid so that we can power those data centers. AI is an incredibly energy-hungry technology. It's estimated that a ChatGPT search takes about 10 times more energy than a regular Google search, right? So we need to be able to power the demand for this type of technology. And so that's where we are right now, and that's why you see news headlines about companies like Microsoft and NVIDIA and Google and Meta spending billions of dollars on the build out for infrastructure for AI. But the second phase is what we call the adoption phase. And you can start to see already kind of sprinkling examples of the adoption phase, and that will be characterized by enterprises and businesses adopting AI tools to do what we've already been doing, but better, more efficient, faster. And so that's kind of how we think about the adoption phase. And the thing that's interesting about adoption is when it comes to software, that is a very unlimited universe. And even now, the tools that you need to create software are really at your fingertips. I do think that AI is going to usher in a golden age of entrepreneurship, simply because it's just democratizing a lot of access to skills and knowledge that might have otherwise been hard for people to reach. But the last phase, the transformation phase, that is one that is incredibly exciting to me. At any given time, when you look back through history and you've experienced a technological breakthrough, the first part and the fastest part is adopting that technology to do what you're already doing, but better. But the second part, and what I would argue maybe the most impactful part, is when the technology is used to do things that you couldn't predict before. Like there are industries and business models and applications that are going to emerge out of the AI revolution that we couldn't even predict today. In the same way that you couldn't explain, to a new user of the internet what an influencer is, right? There wouldn't be a basis for understanding the economy that grew out of a form of new technology. So I do think the third phase is the one I'm the most excited about. It's when AI hits the real world. I mean, you look around today, I was in downtown Atlanta, saw a Waymo driving by. Atlanta is one of 5 cities that has autonomous vehicles. And that's incredible to me. Just to share like a personal anecdote, my grandmother, she grew up in rural Eastern Europe. She didn't see a car for the first time until she was almost 12 years old. And when she did, she almost fainted from fear. She was like, where's the driver for this like horseless carriage, like what's going on here? My mom now drives a car that's a hybrid that uses electricity, which I think is just an amazing feat of technological advancement for just one example of a technology. And then here I am in a city that's offering driverless cars. Yeah. So the future for transformation, I think, is really exciting and something that we should all be paying attention to.
Yeah, if you're here from out of town and you haven't ridden in a Waymo, it's quite an experience. So, I mean, take advantage of it while you're in Atlanta, while you can. You don't have to go far. just around the block. But it's worth it. It's so interesting. Should we switch to geopolitical fragmentation a little bit? Talk a little bit about that?
Yes. So there are a number of implications of a more geopolitically fragmented world. But just to take a step back for a second, you have to remember that we've been on almost a one-way escalator ride up of globalization since the end of World War II. It was characterized by the movement of goods and people freely across borders. But as of late, and I would argue in part due to the COVID-19 pandemic, we've seen a little bit of a step back from that trend of globalization. We're now seeing a lot more regionalization, a lot more supply chain rewiring and manufacturing being brought back to domestic soil, which is this idea of reshoring. There's a lot of different types of shorings, pick your poison. Reshoring, bringing it back to domestic soil. Friendshoring is bringing trade back to more free trade friendly partners in countries near us. Nearshoring, that's nearshoring, bringing it back to countries near the US. So there are a lot of trends that have implications for investors from geopolitics. One place to start is just remembering that the US is still the American innovation engine. If you look at the number of unicorns, now I don't mean unicorns, I mean startups that are valued at $1 billion plus. We have about 656 unicorn companies in the US. That is more than the next 10 countries added up together. So we still have quite a lead on our innovation pipeline. But just because our pipeline is strong, it doesn't mean that there isn't going to be competition. So that's certainly another element of geopolitical fragmentation, is countries really competing to see, okay, well, we've identified that AI can change everything. Now we think AI is of like a national security importance level. And so we want to make sure that we have the best AI, that we own a lot of the means of producing the best AI, and other countries are doing the same thing, because there's this kind of unspoken belief that the country that masters AI the fastest and the best has an advantage both from an economic standpoint and also from a military standpoint. And if you look at military expenditure, there's another mega trend. This past year, 2024, we reached a new record for global military expenditure, $2.7 trillion. It's a 9% increase over 2023, which is the steepest year-over-year increase since the end of the Cold War.
Shout out to the iShares Aerospace and Defense ETF.
Yeah, ITA. So that's another theme that's very much in focus that I think you're going to continue hearing about. And then last but not least is this idea of, what are central banks doing? Central banks, the main bank for a country that's managing money, that's trying to keep the economy stable. We've seen a lot of central banks actually stop buying dollars, US dollars, and start buying more other forms of monetary access, things like gold and even Bitcoin. So like all of these things I would bucket under the mega force of geopolitical fragmentation. And so what do? Well, I think there's definitely ETFs that can help tap into some of these themes. I mean, if you think about IWF, for example, iShares Russell 1000 ETF, it's taking from a universe of 1,000 stocks, which represents roughly 93% of the market capitalization of US stocks. It's taking the ones that have the strongest growth profiles, right? Who's earning the most revenue, who's growing their profits faster than their peers, who's seeing the stock price of their companies accelerate and experience that type of momentum. So it's gathering a collection of, call it 350 to 400 US stocks with those types of growth characteristics, which can make a lot of sense for a long-term investor. You think about something like IFRA, or IFRA as I like to call it, and that's a collection of over 100 US infrastructure companies split into two groups. The first group I like to call infrastructure owners. So think your gas, your water, electric utilities, your railroad operators, the people literally running the infrastructure that makes our country work. And then the other part of the basket is infrastructure enablers. So think construction companies, engineering services, heavy machinery equipment rental companies, and all that, again, in one kind of unit that trades on the exchange like a stock. And then the last one is IETC. And IETC is a really interesting one because it's tapping into US tech companies, but it's actually using AI and big data behind the scenes to figure out which US tech companies are the most shielded from geopolitical volatility. So it's looking at things like, okay, which US tech companies have government contracts with the US government? That might make them a little bit more stable in moments where we see a lot of reshoring and supply chain rewiring. It's looking at where are these companies hiring? Where are they building headquarters? And so again, just 3 examples, and I know it's a lot because we have 450 iShares ETFs to choose from, but these are just 3 examples that I think can make can be interesting for long-term investors who want to tap into some of these trends.
So the last one's probably the most intriguing and probably one of the
What could that
topics
be?
that's probably most interesting from the audience. But what about cryptocurrencies, or I should say Bitcoin, because there's
Yes.
a population that thinks it's Bitcoin first, right? It's the superior asset.
Well, it is the largest.
Right.
So Bitcoin is roughly 55 to 60% of the total crypto universe. It's by far the most widely adopted. It was also the first. It was incepted back in 2009. So it's still a pretty new asset. In some ways, a lot of people describe it as the first new asset in
New asset
150
class,
years,
yes, indeed.
which is really powerful. And I think what makes Bitcoin relevant in a simple way is trying to think about the problems with money that Bitcoin can maybe solve. So you think about money. Money has to do 3 things. It needs to be a medium of exchange, right? We need to go out and be able to buy things, transact with it. It needs to be a unit of account. We need to be able to measure value with it. And it needs to be a store of value. It needs to be something that we can use to save wealth, right? And if you think about money through time, as you can see here on the right, we've used a lot of different things for money. I mean, in early days, we were just transacting by swapping goods, the barter economy. I would give you a goat, you would give me a bushel of wheat, right? That had some problems, right? You have to maintain it, store it, what if the goat dies? Like, there's all sorts of things that were wrong with the barter economy that made us move towards using currency that was in the form of something that was scarce. So maybe we used seashells. We did actually use seashells, fun fact, at one point in time. Maybe it was silver or gold, and then eventually it moved on to paper money that was backed by silver and gold. And then eventually in the 70s, we moved towards paper money that's not backed by any real world asset, just the full faith and trust in the US government, right? So, over time, what's come up are these kind of persistent challenges that with traditional money. I mean, one is the fact that money is prone to inflation and debasement. You think about the purchasing power of a US dollar since 1913, it's declined about 93%, right? So inflation can be a big challenge with traditional money.
Absolutely.
Then you think about the fact that it can be very hard to send across borders. Like I mentioned, my mom is from Eastern Europe. We still have family over there. We try to send money back, and it is a pain. Going to Western Union, it takes a couple days. There's fees I have to pay on top of that. And then the last one, which I think is particularly relevant overseas, is the fact that money is still subject to seizure or censorship. And we forget, I think, sometimes that for a lot of people, there's about 2 billion people that live under authoritarian regimes around the world. Those are people who don't have that trust.
We take it for granted.
We take it for granted a little bit. So what did Bitcoin do? Well, Bitcoin represented a potential solution to some of those problems. One, because it has a fixed supply, so there's no Bitcoin printing machine. There will only ever be 21 million Bitcoin in circulation. And it has this programmatic supply that's hard-coded. So roughly every 4 years, the circulation of Bitcoin decreases by half. But there will only ever be 21 million in circulation. So we know that the supply is fixed. The second thing is that it's digitally native. So you can transfer value anywhere in the world, and it settles almost instantly, and it's a very, very low cost transfer. And then last but not least, it is not owned by any one company or government. It is truly decentralized and non-sovereign. And so for a lot of people who may not have that trust in their financial institutions or their major governments, this represents something that exists outside of the control of other intermediaries. And I think that's a big part of the reason why you've seen so much adoption of something like Bitcoin. And again, I think the store of value aspect of Bitcoin has been the thesis that a lot of investors that I've talked to have kind of resonated the most. They're kind of thinking of Bitcoin as maybe akin to digital gold. And so using it at small amounts as a diversifier, because it's not going to act like stocks or bonds in moments of geopolitical volatility, because it's thought of as this hedge against inflation, against currency debasement, against geopolitical disorder, and increasing distrust, because you don't need an intermediary like a bank or a government in the middle anymore. It's something that exists outside of those structures. So for a lot of those reasons, it's been a big part of the adoption story of Bitcoin. It's not for everyone, but I think what IBIT represents is kind of the easy button for gaining exposure to this new asset class. So all IBIT is just Bitcoin. It's trying to track the price of Bitcoin. It's an ETP, and it only owns one thing inside of it, and that's Bitcoin, plus a little bit of cash to manage the trust expenses. And so for investors before IBIT, if you wanted to own Bitcoin, you had to go out, open up an account with a digital exchange.
Third party that
Right.
nobody may have been
Third party.
familiar
Yep.
with.
And some people did that, which is great, but for a lot of people, they didn't want to have another financial account
Correct.
to manage. They didn't want to give their information out
They just
again.
wanted exposure.
Yeah, they just wanted exposure. And so I think for a lot of reasons, from a trading perspective, because trading on those exchanges can sometimes be quite costly, to the tune of 50 to 120 bips just to trade in and out. I think for people who want long-term buy and hold exposure to Bitcoin in small amounts, something like IBIT just represents
Safe play. Easy.
something more convenient, an easy button.
You don't have to worry about the self-custody piece of it all. It's just
Yeah.
right there in your Fidelity account, along with everything else that you've got.
Totally. I mean, the custody aspect is hugely important. I mean, I'll just touch on that a little bit, if we're good on time. Oh, wow, we're good. Okay. Couple minutes. So when you think about custody, you have to remember, because Bitcoin isn't controlled by any one entity. So the responsibility of custody in Bitcoin is on you as the investor. And if you lose your Bitcoin or it gets hacked and stolen away from you, there's no 1-800-BITCOIN number that you can call to say, hey, give it back to me. So custody has been a huge part of the IBIT story. And basically what IBIT does is it allows people to get exposure to Bitcoin, as you said, Mike, but with institutional grade custody that's managed by a partnership between BlackRock and Coinbase. The way I think about it, just to kind of like give an analogy, because I think this can be helpful. You think about Bitcoin. There's two parts of Bitcoin. There's your public key, which is what enables people to send value to and from. You can think of it like your email address. You don't need to keep it, secret. It's what people use to interact with you, right? But your Bitcoin is a combination of two things. It's your emails. It's the things you want to kind of keep to yourself, and it's your Gmail or your email address password. If somebody gets that password, they can log in as you, and they can send your emails, your Bitcoin, away from you and out of your control. So what do we do when it comes to custodying our Bitcoin that's in Bitcoin, that I did? What we do is we take those emails and we put them on almost like the equivalent of a flash drive. And then we unplug that flash drive from the computer, and right away you're removing the cybersecurity risk of a hacker, right? Because now you're just thinking about physical risk. How do I keep this flash drive safe, right? And then to take it even a step further, we break that flash drive up into little pieces and we hide them in military-grade vaults around the world. So even if you get one little piece, you're not going to be able to put it back together and access that Bitcoin. And that's the concept of a warm wallet or a hot wallet, which is that email, your email's still connected to the internet, and a cold wallet, which is the industry best practice for keeping your Bitcoin safe, which is the idea of taking it out of the digital ecosystem and keeping it safe and guarded in physical vaults. So that was a lot, but I feel like hot, cold wallets come up a lot. That's an easy way to think about it.
Once you start going down that path, it's just like, it's hard to stop. You just gotta
It is hard to
right? So, well, I know we're getting close to time, but any closing thoughts?
What I would just say is, I think we can all agree that there are these themes that are coming up again and again, and that they're having a real impact, not just on what markets are doing, but what investors are doing and how we're living our everyday lives. I think that thematic investing can be a really good way to feel like you're owning the future, but with an ETF that's diversified and as part of an overall broadly diversified portfolio. But I want to say once again, thank you so much for having us and for spending the time to go through the concept of thematic investing and what's driving markets in 2025.
It's been great, Anna. Thank you so much for joining us. And